Great to speak with you. You say you're ambivalent about Apple, and you fall in the camp of, earnings estimates need to come down. Is there anything that Apple can do in this report that will change your mind about all that?
Sure, and good morning. Look, I think there's a tremendous amount of uncertainty, more so than usual with Apple, around this quarter and somewhat around the year. So for this quarter, Apple had production delays. They also had an extra week. And so I think it's been difficult for analysts to really land on a number that they feel comfortable with. But more importantly, regardless of the quarter, investors will focus about Apple's outlook. So if they had production issues this quarter, are they bullish that they'll catch up on poor production last quarter and have a strong remainder of the year? So I think there's a near-term question there. But I think there's also a broader question, which is, did Apple benefit from the pandemic? Their operating profit was $65 billion in the year before the pandemic. Last year was $120 billion. You had this huge company that effectively doubled profits through the pandemic. And there's a big question, will we have a lull? We're seeing a lull in the PC market. We're seeing a lull in other areas of consumer spending. And so I think that's a big question. There is, consensus is sort of thinking that Apple will grow maybe 1 or 2% this year. And I think that's the question, whether Apple will go through a digestion period this year and potentially next year even, following tremendous results over the last couple of years.
You also made the point about Apple's valuation, and certainly that, from your standpoint, hasn't been helped by this 12% run we've seen in shares so far just this year. But in 2019, you say Apple's valuation was much, much lower. I mean, I think it was like 16 or something, and now it's in the 20s. And so that factors in. I mean, for you, it's harder to see estimates coming down and Apple holding on to that valuation.
Yeah, look, I think Apple over the last 3 or 4 years has proven that it's a more diversified company than just a hardware company. The services business has really grown. They've had good gross margin strength. But to your point, when Apple bottomed in early 19, the stock was trading about 13 times earnings, about 10% discount to the market. Today, Apple's trading at a 30% premium to the market and trading about 24 times earnings. So it absolutely has proven that it is a more durable and more comprehensive franchise of businesses than it was 4 or 5 years ago. But its valuation very much reflects that. So the combination of a relatively healthy valuation plus some uncertainty about growth this year and next year, I think risk reward is probably pretty balanced on Apple at current levels.
In terms of the uncertainty for growth, is any part of that uncertainty surrounding services revenues in a recessionary environment when consumers are trying to cut back on things?
Certainly. I mean, I think the biggest areas for potential weakness or softness in Apple's business are hardware related, particularly iPhone, which we think will be down in the mid to high single digits this year on a unit basis, and on Macs. But I think it's a good question. And in services, the two biggest drivers of services are the App Store, which is tied to gaming, as well as advertising and its payments from Google. And there are real questions about both of those markets as well. And so those two represent 60% of services. And there's a question about how well will advertising ultimately hold up this year, particularly if we have more of a softer economic backdrop. And also gaming, in light of the fact that consumers appear to be spending less time with their PCs.
Tony, longer term on iPhone, there has obviously been this debate out there as to whether deferred sales are really lost or whether the upgrade cycle is just going to reaccelerate or in fact, if it's just been elongated to this point. I mean, are we still going to be indefinitely on this, every couple of years? They try to refresh the demand and people are poised to upgrade. What's the pacing of that look like? And I don't know, how does it change the way the longer term financial profile looks?
Right. So if we look back over the last 8 or 9 years, Apple has done about, on average, 220 million phones per year. But it's been as low as 190, and last year was as high as 240. So we've been in a pretty consistent range. Apple's installed base has grown. So if we've had consistent sales and a higher installed base, that means that people are keeping their phone on average for longer. And I expect that that will likely continue to occur, particularly as phones become more expensive. I think the big long-term question is, do consumers ultimately shift to another platform going forward? I know metaverse is kind of a bad word right now, but ultimately wearables are becoming more prevalent. Apple's expected to announce a headset at some point this year. And the real long-term question for iPhone is, do users spend more time accessing the internet through other devices? And that's what happened with PCs. PCs went down when people started using their iPhone more. And that's really the secular long-term question for Apple, and whether it can get ahead of it with its own headsets.
Sure. Right. Tony, thank you. Toni Sacconaghi of
Thanks for having
Bernstein.
me.
Apple shares up 2% pre-market.
Okay. Take a quick